Good day, fellow investors. My name is Sven Karlin, and today I want to discuss an investment that I think has a very positive risk-reward scenario. The company is Hain Celestial. What is interesting is that Hain is exposed to the organic sector, which has shown extreme growth in the last 10 years. And given that Amazon just bought Whole Foods Market, I expect that trend to continue in the future. What's good is that Hain is exposed to Amazon, as it directly sells on Amazon, plus Hain is one of the major suppliers of Whole Foods, and Amazon is not exposed to the retail grocery risk environment because, Hain is a producer. So if there are many more retailers that sell food and organic foods, it's good for Hain because their distribution channel will just get larger. It's not involved in the competition among retailers. On the contrary, more retailers will have to fight for Hain's brands, thus Hain might see larger margins. So that's a very good positive. On top of that, Hain's stock price was around $70 in 2015, then it dropped to around $45, then it went up to $50, and then Hain said that it has an accounting issue. They wanted to check whether they are accounting correctly for their sales. They accounted for sales when they shipped the product to the distributor, and now they wanted to change it and account it when the distributor sells the product. For 3 quarters we didn't have any financial reports, and now last week Hain reported. It didn't report any material changes to previous financial statements. However, due to the negative environment in groceries, stock price dropped even further, and now we are at multi-year lows at around 31.60. When I see a company at multi-year lows, my bargain lamp turns on and I'm looking what's going on, what's happening. In order to see what's happening with Hain, we have to look at the fundamentals, and then we'll look at some catalysts to see if it is a good investment or not. So let's first look at the financial highlights that Hain reported. Net sales grew at a 4% rate on a constant currency basis. In the US, sales declined 6%, because of the inventory realignment. 55 million, that's the 6-7%. If not, sales would have been bigger. Sales in the UK grew, EBITDA was increased in Europe, in Canada, so all is good. And earnings per share are 0.64 adjusted to 0.79. If I plot that to a price earnings ratio, then it comes to really high, because Hain's expected yearly earnings will be 1.2, which give a price earnings ratio of 26.3. 26.3 is just in line with what the S&P 500 offers, so same risk there with Hain and the S&P 500. However, Hain has something very special. It doesn't pay dividends, and it doesn't do expensive buybacks, as all the other companies. That allowed Hain to double its book value in the last 8 years. That's a rare company. Berkshire Hathaway does that similarly. So it's a very growth-oriented company. It does a lot of acquisitions, it buys small organic brands, includes them into their distribution channel, and grows on that. Now, as the risk is the same as the S&P 500, I think the sector is much better than the S&P 500. The management is much more conservative, no buybacks, no dividends. We invest everything back into the growth organic trend. Thus, we limit our liabilities, which is a smart thing to do. It's a food company, so it's a defensive sector. People have to eat no matter what. So that's another bonus for Hain. And then, I think Hain will be an excellent takeover target. Whole Foods was taken out at a valuation of 35, Hain's is 26. Whole Foods is in a segment with lots of competition. Hain Hein's competition is lower. So it's an attractive takeover candidate. I don't think that in the long term people can lose money by investing in Hain. However, the high price earnings ratio is a little bit too high for me. As you know, I prefer much lower risk for much higher returns. And you can check my Amphi video for an investment that I like. However, for those who are not willing to take those kinds of investments and Indian investment, Hain I think is much better option than the S&P 500. Please leave your comments below. Do you think Amazon might buy out Hain, or somebody else might buy Hain to enter into Amazon and into Hein's distribution channel into Whole Foods? Let me know below. Looking forward to your thoughts. Thank you for watching and see you in the next video.